Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Tuesday, and we're now at the 20th of February, 2024, and the time as we're talking, 6 p.m. Central Time. All right, tomorrow's a big event day. It's Nvidia, and we get the earnings right after the market close. How the market reacts to it will determine an awful lot. The fact that it's after the close in such an important stock means the aftermarket's where you're going to go bonkers. We had Palo Alto, Networks today come out with their earnings. I didn't think it was a big miss. They were down 18.5% before you knew what was going on. So it's just a fair warning that because this is the darling of the stock market and it's affecting so many of the indices, beware. Treat it like a major Federal Reserve meeting. In other words, have major respect for it. Expect the unexpected. Protect yourself. And after it's done, you move on to whatever you're going to do. But understand the importance of it. If you underplay that, you might find yourself in trouble. Would I, for one, be telling my clients to go into stock indices now in front of that? I can promise you I'm not going to do that. All right? I would rather come in and be alive the day after. Now, we have a lot of data coming out. First off, first piece of important data, as far as I'm concerned, is Thursday. We have our live webinar. Now, I open the Zoom room, it's a Zoom chat room, at 12:15. I start talking at 12:30. I finish approximately 20 minutes later. I do not make a recording of this available for you. You attend, there's no charge, ask your questions, ideally ahead of time. How do you get your invite? If you haven't gotten one from me, move your cursor right up there to the top. You'll see an icon, give it a click, fill out the form. You'll be sent via email, your user ID, your password, and the link. In that email we send, if you want to ask questions of me, that's the ideal spot to do it if there's stock, SPDR, or ETF. Futures I can generally answer on the fly if I get enough time. We have a lot of people that come into these. And you can always call my staff. You might ask, why do I only do them 20 minutes? I have found that's about the drop-off time. The average person during that time, during the day, they do it. Why am I doing it on this Thursday? Because it's the day after Nvidia. And it was so important. I'd rather do it earlier in the week, but I did it for that reason. Now, one other thing. Let's look at what we have coming up here. You have your MBA mortgage survey in the morning. By the way, when I put out my full research, I not only put this out, often I give you the estimates as to what the market is doing, a lot more information than you're getting here. But I decided to give you headlines in these free videos so you know what's happening. At 7:30, you get the Johnson Red Book sales. The Federal Reserve minutes come out at 1 o'clock tomorrow. API weekly stocks, they'll be out tomorrow at 3:30 in the afternoon. Fed members, we have 3 of them speaking. And as I said, Nvidia after the close of business. So got to keep your eye on it. So we had a pretty good break today. Rallied late back in the day. Took off some of the loss that you had. You can see the market is down 0.64%. When I did my earlier video in the metals, it was down 0.60%. But that's not much of a correction at this point. The pattern, if we take a look at the market, lower highs, lower lows, bearish. Where do you think I would think the first support line is? The 18-day average of closes. Now, I am far along in my new charting course. I looked at it. I haven't done a full charting course in 8 years. I'm adding a lot to this one and doing it in such a way that I don't have to do the whole course again. I can put fresh examples in it and won't have to do what I'm doing, but it is cool. And I wish I could give you the exact date I'll have it done. I'm in the last finishing part of it. I'm certainly well beyond 75, 80%. I'm done that already. So it's the last mile. It's always hard. But you can see where you're at here. That's your support. Now, if the market falls apart tomorrow because of the FOMC minutes, Nvidia, whatever the event, all right? If it were to fall apart, possibly you go all the way back to these numbers, but more likely would be the first stop at the at the lower Bollinger Band at 48.90. That would be it. Is there anything on this chart that can just turn you bullish? There is, okay? If you don't take out this low over here and you just from here zoom up through the highs of yesterday, actually 2 days ago, That's Friday. Today's Wednesday, Tuesday. We weren't, well, let's call it. You were open there. If you come in with the dates, let me just show you. Remember, we had the holiday. So they do have the market. That's the 16th. You combine what you did on Sunday and Monday's trade into Tuesday. I don't know if you're aware of that, but that's how the exchanges do it. And so this is where you're at. So it would be Friday's high. Then I've got the 50-75 level and higher coming. We've seen a lot of people come out. Goldman was the last one that just said, hey, they're raising their year-end targets. I want to use something carefully here. Year-end targets. That does not mean February 20th, the market has to go where they're saying. It's where they think the market will end up, as do many of the other analysts. When they give you a target, they generally are talking where the year will end up, but some, they can be different. They can say, hey, I thought it would hit 5,200, and that was it. Everybody's got a different way of doing it. Momentum down, trend down, bias up. Rough market. NASDAQ, wouldn't be surprised if you get down to the lower Bollinger Band, try to hold it. But again, this can do anything. This is right in the front of Nvidia. But Nvidia is such a big company now that it impacts everything. So you've got to be careful, okay? I am not saying that you normally do that, but this is a stock that's come out of nowhere, gone bonkers to the upside. Everybody wants to own Nvidia. I don't have a conversation where people don't say, where's a spot you think that can be? Well, we'll talk about that in other areas. And I did in my, if you look at my stock index one, the Spider ETF one tonight. Lower highs, lower lows, still the battleground right here and the same there. The Russell's the strongest. It's got the uptrend. It's got the resistance at the Bollinger Band. I don't like buying these stocks when interest rates are this high, but as a market technician, and that's what I am at the end of the day, the trade's probably, if they are buying at 1998, which stops right under that low. Okay, am I keen on it? No, but that's what it is. So then we get over to the 5 and the 10-year notes. Now on the 10-year, the first challenge of the Bollinger Band in black, the dashed line in the green, that's the 100-day average, certainly held the market. You have the bearish embedded reading. This is the big influence on the market. But I always respect a Bollinger Band with a key moving average. That doesn't mean it has to work, but it often is a stall point, be it on the upside or the downside in the market. And that seems to be what you've done there. And I think you'd agree with me, in the 5-year, it's the identical thing. Get the red line to close over 21, you'll slice through that green line and then probably try to make a run back to the 18-day average. Depends where it comes from, though. In the dollar index, you have outside day downs. You know how to work with outside days. Do you know the importance of them? If you go to my website under the word education, it's iraepstein.com. Under the word education, go look at outside days, the course under education. That's where you learn how to work with. This is a big time event. So I'll be watching this very closely. I'm not going to teach you here what I teach there, obviously. During the webinar, you can ask me questions about it. Higher high, lower low. Nah. Oversold, got to bounce, but now you're fighting your battle at the 100-day average in the 18. This market is watching. Obviously, the dollar could be impacted if Nvidia has a shock to the marketplace. People might run to the U.S. dollar for safety. They ran to gold today. I can tell you the options can give you an idea of the volatility you're expecting in a market. And the market tomorrow is looking for 11% up or down volatility in Nvidia. It doesn't mean it has to occur, but that's what it's pricing in. That's big. That'll relate into our stocks too, if it occurs. If. Higher high, lower low. You see how the market's fighting here. Instead of the 100-day, it chose the 200 because it came right in with the Bollinger Band. And if you've been a seller under that, you haven't done well at all. That's why I tell you, I can't wait to get this new course out and teach all this to you in the way that we do there. Bitcoin, today the market fell to a key moving average, held it. I talked about it in the morning subscriber video. We'll see if you get a bounce. We have to leave the February in another day or so. It goes off the board, but the open interest stays with that up until the end. I've already in my morning subscriber videos, I think I moved already to the March. Now we get to the energies, and it was interesting. I saw an article come out today, a flash article, and it said, look at the backwardation taking place in WTI. It had gone from about an 80 cent difference between the front month and the second month to about $2. But today's the last trading day of the March. So I don't know that it mattered all that much. Got to look a day after that. I think somebody was reading more into it than they had to, but you never know. All I can tell you is you came down here, you held the 18-day average, and you've had a heck of a bounce. The bias is still up in the market. You've stayed over the 18-day average. Now, you did have a bullish crossover. I'm always looking at these. So here, the 18-day average gets over the 100. I'm looking for new highs in the market off of that. I haven't had it yet. Maybe I won't, but before it gets under that, normally I'm looking for the market to make a higher high off a crossover pattern. We might get that in WTI, we might not. We might get what's called a KISS pattern. It's when the market runs up to the 100 and then turns right back before getting over it. We certainly had the bullish crossover right here, and you did make the new highs. Will you get the secondary one? It's hard to tell. Is the trend up? Yes, but the market is very overbought. Gasoline has corrected all the way back down to the 18-day average. Now, I pointed out that with our next CPI number, for most of February, the market had been coming up in price. It started the month out much lower at 238. Even at the current price, your 13 cents a gallon, wholesale, obviously, futures market wholesale, higher than that. So you got to pay attention and see how that works out. Nat gas, here's another one of these outside days. Do yourself a favor. Look at the Bollinger Band, look at the outside day, and take a look at the course, learn something. I'm Ira. I hope to see you in the webinar on Thursday. Obviously, a big day tomorrow. Be careful with it. Have a good one.